What isn't a surprise for the market investors either is the way that the ECB is heading. It has been, some critics have said, too slow to act, and now we've got the euro signalling a significant slowdown in Europe. So in terms of market strategy, is there any opportunity for growth in either stocks or bonds in Europe?
Well, this is a very interesting question, because now the ECB is challenged in its monetary policy tightening cycle. When we look at the economic growth rate forecast, we all know that we were facing a very volatile profile for the GDP for the Eurozone for this year. And inflation is still, growing up, because we all know that inflation is still, the price increases are still, will be still positive over the next months. So inflation is still growing, GDP is still downing. So how the ECB can manage that situation? And clearly it questions the relevance of this of the monetary policy of the ECB. And we clearly have investors that are challenging the ECB, but we do believe that the ECB cannot miss this opportunity to tighten its monetary policy, because otherwise it will clearly question its credibility. What a central bank like the ECB can do when inflation is going up at 8%, for example, or 10% in Spain, and clearly if there is no reaction coming from the ECB, it will be a major concern for next year for the ECB. So there is no alternative, I think, regarding the ECB to tighten its monetary policy in July and in September, and then in November as well. So clearly we stay distant from the bond market in Europe, because due to this monetary policy tightening cycle, there is no positive development to expect in this asset class so far.